The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Thanks for tuning in, starting your day with me. Right now, we get the markets. We're talking about 9:06 a.m., 24 minutes to go until the start of trading, and we got higher prices, folks, right now across the board. You're talking about an S&P within about 8 points on the futures of all-time highs, trading up 19 points at 42.50. NASDAQ 100, continued strength in the tech sector. How about being up 82 points, 14,354, 15,000, well within reach when you're only talking about what is that? You're talking about 650 points approximately from where we're trading at right now. That's just more than a 4% rise. Some of those tech stocks, my goodness, right? Let's just jump around them, start them off. Amazon shares, we're now well above 3,500. Maybe not well above, but nonetheless remarkable in terms of the strength and where we've come from. You pull up Amazon. Disclosure, I have some Amazon, one of my retirement accounts. Everybody really has some Amazon if you own any type of ETF in any capacity, because of the size of this company, but you put it on a daily basis, and man, look at that run we had just from June 7th. You're talking about from trading at 31.72. We're up this morning at 35.11. All-time highs on Amazon, 35.54. I believe that's the high. Yes, it sure is. 35.54. We're going to be within about 40 points of that level this morning. Microsoft shares, putting it on a 3-year weekly. My goodness, continued higher across the board. We're going to be pushing all-time highs on the open right near it. You're talking about a high print. Let's back it up on a daily. 266.83. Yeah, so it's the overnight session of where we just were. You're talking about, again, we're going to rise on Microsoft shares, and we got to pull up Apple as we kick it off as well. AAPL, Apple shares 134.61. Apple, a little bit away from the all-time high. You got up to it 145.09, but definitely Apple approaching the upper trend line, upper channel, you could say, in terms of where we are. We've been bouncing around between about 120 and about 140. Since really you go back to December 2nd, you could make the argument that since about July of last year, maybe August 1st of last year, you've been between 110 and about 140 on Apple shares. You're talking about 133.70. Jumping to commodities, currencies, Bitcoin trading 34,000. We'll talk about a couple Bitcoin stories coming up. Why not? Crude contract, continued strength. My goodness, you put it on a daily. Look at this run that we just remarkable. One of the greatest trades out there. I mean, when you have the economy opening back up, not surprising, we get the efficacy numbers for the vaccine. Now, all things considered, right? Anything you look at in the market since that price point, you're talking about the S&Ps are up more than 1,000 points since that level. Okay, so there's opportunity everywhere. But crude doubling in price from that time, November 2nd, and it's been a one-way rocket ship. You did pull back briefly from March 5th. To March 22nd, but beyond that, it's been all strength in a big way. And we got crude making highs yesterday at 74.25. We're backing off a bit, but we're trading at 72.60. The gold contract's up $2 at 17.85. You put gold on a daily. The run it's had from about March 30th, we've pulled back to a 618 on gold. We're bouncing a little bit at that level. Also the area that had a little bit of support going back to late April of this year. Notes and bonds pretty much unchanged this morning. You got the 10-year sitting with a yield of about 1.49%, and we'll jump to the VIX. I've been saying it, folks, and it's not like I'm analyzing something. It's just noticing the VIX here in terms of where you are. Let me back this out to a 3-year weekly. We're making lower highs and lower lows across the board, folks. 15.15 was the low I had on here going back a couple weeks. Seems all but indicative that we're going to make a lower low as well as this market just continues higher. The VIX now flirting with potentially a 14 handle today. 14 handle on the VIX. Have we seen a... Let me just back this up. Have we seen a 14 handle? I don't think we've seen a real 14 handle post-pandemic, but we're within a throw of that level on the VIX. We're going to open at 1539 as of right now with about 19 minutes to go. And as I stated, not really anything getting in the way of this market right now in terms of taking the jobless claims numbers in stride. We'll jump over to those. So we get initial jobless claims totaling 411,000 for the week ended June 19th. A decline from 418 the previous week. You're still talking about above 400,000. Market was looking for about 380,000. All things considered, 20 or 30,000 jobs. is a pretty small impact when you consider the grand scale of the jobs that we're trying to get back and the stimulus that we're providing to get those jobs back. We're talking about 8 million, 9 million jobs that we got to make up. Continuing claims decreasing to 3.39 million. That's a deceptive number, though, when you look at the facts that when you combine all of the government programs in terms of the total of those receiving benefits through all programs was little changed at 14.84 million through June 5th. Staggering numbers. Now, when you look at where we are in terms of initial claims, some staggering numbers at the height of COVID back in March. In terms of where we are, these are March 2020. Is this a weekly basis? Yes, it is. Initial is. I mean, just remarkable on this chart. So weekly basis, we're talking 6 million. 6.1 was the height. It trails off. Declining numbers, but we've kind of stuck around 400,000 right now, especially when we need to make up like 8 or 9 million. So this is the last tidbit of this I want to bring up. So the final count, so we have a couple things here. We have durable goods also came in 2.3% in May. Okay, market was looking for 2.6%. Still the biggest gain since July of 2020. That number out this morning. And we also got final count on first quarter GDP came in at 6.4%, unchanged from the last estimate and in line with estimates. Okay, so we got GDP showed up with the final count at 6.4%. Market was looking for that. We have durable goods orders at 2.3%. Market was looking for 2.6%. And we have initial jobless claims numbers at about 400,000. No, 411 to be exact. Market was looking for 380. Now, that comes amid a record 9.3 million job openings. I was having this discussion this morning alone with some friends. What are those job openings paying? That's going to be the difference here. There's been a lot of inflation in the last year, and we're having this conversation to say one part of the conversation, so to finish up this, is that 9.3 million job openings, a total just shy of the 9.6 million American workers still counted as unemployed. Okay, so we got 9.3 million job openings, and we got 9.6 million people are so looking for it. Now, the problem is maybe those openings and maybe the people aren't quite pairing themselves in terms of how far they are away from supply and demand equaling and both parties being happy with where those lines intersect. There's been a lot of inflation over the last 14, 16 months, 24 months, last couple years, last year, especially when you go for the comps. So a lot of businesses trying to bring back employees at the same pay that they were paying them 16 months ago in an environment where inflation is something that's mattering. Now, those same businesses, let's just use the restaurant industry for an example. They have rising prices, right? They have rising prices of commodities, of food. Maybe they're raising the prices. We've seen some public companies in terms of Chipotle or whatever it is. I think it was them, publicly traded food companies saying we have to raise our prices to accommodate whether it's rising inputs of prices or whether it's that they're going to raise the prices to accommodate higher wages. Nonetheless, they're raising prices. So people are having to live with raised prices, and you're seeing them probably want a little bit higher pay. You also have the stimulus going on. You have the fact that people are collecting some big fat paychecks, not working, and that's part of it as well. We're going to finish this up when we get back from the break, folks. We'll be talking to Kevin Hinks. We'll be talking options, folks. We got 15 minutes until the open. Stay tuned. S&P is positive by 21. We'll be right back.
Golden ratios give shape to everything in our world. Represented in the Fibonacci sequence, these special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We have the S&P positive by 21 points, pushing right near all-time highs this morning, 42.53, all-time highs of 42.58. And as we climb, you're talking about 5 points from that level. NASDAQ 100 making all-time highs overnight. We're just near that level as well, 14,351. Got the Dow up 166 points right now as we come into the opening bell. And we get the Russell positive by 11 points. Look at the Russell pushing those all-time highs as well. As we jump across the board, we're trading at 2311. Russell, all-time highs 2366. Let's jump over to our man, Kevin Hinks. Folks, every trading day, 11 a.m. Eastern time on Tiger TV, Fast Market. Kevin Hinks, Alex Goffey, the team at TD Ameritrade Network, breaking down the market action, setting up hypothetical trades, walking you through setting up those trades, trade management, rolling, defined risk, folks. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. You know, welcome to Data Dump Thursday that we got this morning around 7:30 Chicago time, 8:30 Eastern. And all these data points combined really did nothing to the overall market. They didn't move the futures very much. They didn't move the bonds and notes very much. They didn't move the U.S. dollar very much. I think the stocks are moderately stronger this morning on hope of news about a potential infrastructure deal. And I think that is, besides that, we're a lazy Thursday in late June, Tommy, and I don't think we should look any more into it than that.
Yeah, I would agree, man. We might even get a 14 handle on the VIX today, Kevin, which I don't think we've had in the last approximately 14, 15 months since prior to COVID. 1539 right now on that VIX, and I don't think we've seen a 14 handle, but as this market proceeds, I would agree, man, not much in the way of trading higher. We're up about 21 points this morning. The weekly jobless claims, 411,000, pretty much in line. A little bit of a miss. They were looking for like maybe 380, but in all terms of what we're dealing with here, 20 or 30,000 jobs, not too staggering of a miss. The one thing that I found interesting in that jobs number, Kevin, 9.3 million job openings, a total just shy of the 9.6 million or so American workers still counted as unemployed. Pretty remarkable numbers right now as we come into the summer, and this market just proceeds higher. But what do you look at when you see those types of staggering numbers? And listen, this is just an extraordinary time to be alive and be in the market when we're dealing something like this in terms of millions of people on the payrolls, on the unemployment rolls. And then we have all these job openings as we have the unemployment benefits dropping off, all the variables in play with these staggering unemployment numbers we got here.
Tommy, it's hard to connect any history to what we've had the last 15 months. This has been the mother of all one-off events, because never have you manually shut down an economy and then manually tried to reopen it. And let's face it, government has got it a little bit wrong. They got it in many ways right, but they extended benefits a little bit further than they should have. You're sitting there for another till September with people getting advanced benefits. So that's keeping people on the sidelines and from coming back into the labor force. That's why you've got a 9 million, north of 9 million JOLTS number. So until those benefits burn off, which they will, they are temporary. They're gonna be done by September. You should see a flush of people coming back into the labor force. I think schools reopening will bring people back into the labor force, but we're not there yet. We've still got July and August to get through before that happens. So here we are. Just one thing for your viewers to remember. If you look at a quarter ago, before earnings started, the market between the end of the quarter and the beginning of earnings season, that 2-week period, the market flew higher, especially in all the tech stocks. So that's really, if you want to know what I'm watching for between the end of June and that second week in July, I'm watching for the activity pre-earnings in some of these big names.
Man, and talk about delivering some of these big names. I mean, I was just pulling up Amazon. We had Prime Day, which, of course, only a brilliant company like Amazon can call something a Prime Day, and they get to run it for 2 days. But we traded just from June 7th, Kevin. You're talking about 31.72. We're above 3,500. I mean, just staggering movement, even in a company like Amazon. You're adding, what is that, $340 to the price? You're pushing almost a 10% pop on Amazon prices from June 7th to where we come. And all based on, like you're talking about, man, earnings. The tech companies continue to deliver. We get to do it all again coming in July. But I know we're not done with earnings season quite yet. We got a couple companies in particular coming up tonight with Nike and FedEx. What are you going to be talking about on the program in Fast Market coming up at 11, Kevin?
We're going to be talking about Nike and FedEx. Those are we will ring in the end of earnings season as we do every quarter with Nike. That usually signals the end of official earnings season. So, yeah, we'll cover both of those today with Likefolio. Big news on both those today.
Nice. And Nike, folks, pulling up the Thinkorswim platform. I got the Analyze tab up here. We're talking about a $5.24 move over there for Nike on their expected move for earnings, and FedEx, $12.53. I'll really be interested on the FedEx conversation, Kevin. It's so interesting, like you talk about. There's almost no historical basis analysis in terms of what's going on with this economy. It's the reason why, in my opinion, we've seen so much volatility in some of these companies, because it's so difficult. Normally we love comps, right? The market loves comps, Kevin. I get a little frustrated when I hear comps versus last year, because in some terms they're so meanegless, you know? And so you have all these companies. Normally the market is so great at pricing in whether it's future earnings for a growth company or maybe it's current dividends for a value company or something. But when you're trying to price in a growth company and you're trying to price in FedEx, which is delivering so many packages, it's just an amazing time, folks, to be trading, because there's so much uncertainty, which leads to so much volatility sometimes. I mean, I back it up, Kevin. I remember with their December earnings, I'm backing it up a couple times, man. But talk about, you're at 280 before you knew it. You were at 240 on FedEx, and just like that, we're back at about 300 at FedEx shares. Well, Kevin, we look forward to the conversation. We look forward to the education, breaking down the trades this afternoon. You guys have a great program. Have a great weekend, man. We'll talk to you on Tuesday.
Thanks for having me on, Tommy. Always a pleasure.
Thanks, Kevin. My pleasure as well. Folks, tune in 11 o'clock. They'll be breaking down FedEx. They'll be breaking down Nike. And as I talked about, the Analyze tab on the Thinkorswim platform, folks. Thinkorswim, TD Ameritrade, they are a sponsor. I would use them regardless. The amount of information and the platform they built with Thinkorswim here in particular, the one I love most, as an active trader out there. If you're trading options, you got to know the volatility that's getting priced into these equities, folks. When we were at the peak of some of that volatility and some of the equities, you had the VIX tremendously high, which will impact the type of moves that are priced in to earnings on that front. Okay, folks, apologies, dealing with a few connection issues right now, but we got markets open. Hopefully you can hear me, and we got the S&Ps right now up by 22 points, jumping over to the S&Ps, 42.54 within about 4 points of those all-time highs. Hopefully you can hear me. Let me know if that's the case, but I believe so. We get the NASDAQ 100 up about 90 points, 14,352. The Dow up 182, and the Russell up 15 points. Russell within 50 points of the all-time highs there. Jumping around to what else we have going on. And if somebody could let me know. Can you hear me in terms of what's going on? Maybe my producer, somebody in the den. Testing 1, 2. All right. Okay, thank you. Okay, jumping around to what we have going on, let's jump around to some of the action we have. How about used vehicle prices? So this is an important one. It's a big factor in terms of what's happening with the CPI data here. Used car prices poised to peak in U.S. after pandemic surge. So already we're getting a little bit of data here in terms of that number coming down. All right, you have CPI, used vehicles year over year, and then you have a Manheim wholesale index year over year. Point being here, the decline of the wholesale usually leads in terms of where this goes, and already we have those numbers declining here, and that's going to factor into the CPI. And this is why I bring it up, all right? We're all tantalized by the CPI data that we get, and the used vehicle prices are contributing in a dramatic way, as we all know to that. So this is something you want to keep your eye on because it's going to factor into CPI, and if we start getting huge pullbacks in used car pricing, which allows for the Fed to maybe rightfully so argue that inflationary tendencies are transitory, as they've been arguing, that's going to matter in terms of not worrying as much about the Fed having a taper on the inflationary concerns that some people think are not transitory. Soaring prices for secondhand vehicles help push inflation to highest in more than a decade. The cost of used cars and trucks climbed 10% in April and another 7.3% in May. Okay, you get into the numbers that they're talking about here. The wholesale index of used vehicle value than a year earlier as of mid-June, but down from an annual rate of 50% in April. One effect of, what a bummer, that my, unfortunately, apology, folks. I may need to restart my router here. Not sure. I'm having some connection issues, but we'll jump right back into it. Anyway, the wholesale index here for used vehicles, 36% higher versus 50% higher. This usually leading the individual number in terms of where those used vehicle prices go. And and there we go. Nonetheless, decelerating prices, and that will come into the CPI data eventually, but we're already seeing some of that as it happens. They call it the bellwether of the industry, the wholesale market where dealers buy and sell in bulk, already topped out. Prices of individual secondhand cars should follow in a matter of weeks. That's one analyst at Cox Automotive. They own Manheim, the biggest U.S. auction house, selling millions of vehicles a year. So yeah, I mean, they're if anything, you could say that they're biased to not be saying that, right? Cox owns Manheim, the biggest auction house selling millions of vehicles. If anything, there would be a bias for them to say the market's still on fire. We're seeing higher prices. Maybe they're saying, hey, things are pulling back. They can't deny it. The prices are there, and nonetheless, they are pulling back already, and maybe that's a continued decline. If you're out there looking for a vehicle, maybe wait a little bit, especially in the used side, as things probably indicate that we may have peaked out and they'll be coming back. Prime to buy. U.S. households saved more money during the pandemic, adding firepower for big-ticket purchases like cars. Savings rate as a percentage of disposable income, pandemic average, almost 20%, 18.7, staggering numbers there. Global output of new vehicles in the first quarter down more than 2 million units. That's going to matter, and you're seeing it mattering in these prices, but nonetheless, we may have peaked out there. All right, what else we got going on? JP Morgan says Grayscale shares extra headwind for Bitcoin. Recent declines, continuation of weak flow. $30,000 level for crypto. I mean, that's kind of the level that everybody talks here in terms of what it is. But possible sales of shares in the Grayscale Bitcoin Trust, GBTC, which gets all the attention here upon expiry of a 6-month lockup period, could be an additional headwind. Something to keep in mind. There's so many variables in the crypto sector, right? You pull up Bitcoin, we're back at about 34,000. You made it down to 28,800. 30,000 does look like an area, but man, you back it up, folks. 30,000 would have been bonkers any year besides 2021, all right? For some context here, in a 5-year weekly, we hadn't even seen above 20,000 only once briefly when futures went live in December of 2017. And then since then, okay, we never saw above about 14,000 since October of last year. We're still sitting at double those prices. The run has been so substantial on many fronts that you almost just don't consider how lofty things are in terms of the pullbacks that are possible. You pull up Coinbase, I tell you, my friends that are not even in the market are out there talking Bitcoin this morning, talking about ways to own it. This thing is still on fire in a big way. Checking out where, I want to pull up where Dogecoin is trading out of curiosity. Please do not buy Doge. I say it over and over. Quickest way to lose all your money probably is to sink it into Doge. Yeah, if you're trading it like super short term, maybe, and you can get out or something like that. But on a daily, you're talking about we're trading at 24. You put it on the weekly. This was down to, I think, 16 cents. Yeah, 16.90 pennies. We were as high, folks, when Elon went on SNL. I guess you got to back it up. When did he go on SNL? That's where he went on SNL. Not a coincidence, folks. Elon goes on SNL. They pump Doge up to 70 cents. We're sitting right now at 23 cents. Yeah, we just jumped from 17 cents. But you don't need to be brilliant chartists to see where the trend is, folks. And the trend is probably right back down to 4 or 5 pennies, which is where this thing was sitting at for a while before it was trading at even 1 penny before that. Okay, what else we got going on? Bank of England warning against tightening too soon as inflation surges. Pretty much the same story going on with the U.S., right? Talking about too early, premature tightening. The bank is warning against toughening its language on a need to maintain stimulus, contrasted with a sharp increase in the bank's outlook for inflation, which officials now see peaking at 3%, half a point higher than their forecast just 6 weeks ago. Pretty similar to what's going on in the Fed. The Fed up there in expectation for this year's 2021 inflation to 3.4% from 2.4%. And they still said, no reason to worry about inflation. It's transitory. It's going to be coming back down. They upped their forecast for 2022 by 0.1% for inflation, and they only upped it in 2023 by 0.1% in terms of their expectation. Pretty much both right near 2% in terms of 2022, 2023. They're just not going to make the leap that the pricing that we're seeing right now is going to persist for 2 to 3 years as things hopefully sort themselves out. Nonetheless, Bank of England, they're out there saying that as well. All right, talk about crypto. We'll wrap it up with this. Yeah, and there you go. S&P did make a record out there. Andrew Horowitz, Silicon Valley. How about a $2.2 billion crypto-focused fund? It's just everywhere, folks. It's going nowhere. You'd be much better off choosing a crypto if you want to be in that sector, as opposed to Doge. Doge is like a lottery ticket, folks. There's plenty of stories of people that cash in on lottery tickets, all right? And yeah, you could dabble in something. But whatever you're dabbling in, make sure that the capital you're using is completely risk capital, as opposed to, I don't see Bitcoin going to zero. You might want to trade it like it's all risk capital, though, when you can pull back 50% in a month, right? But Bitcoin, maybe Ethereum, two of the best out there. You're probably not going to see 1,000% return in the next couple of weeks, but it's not going to get wiped out either, and they will be around. Stay tuned, folks. We'll be right back after the break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps right now, positive by 25 points. You're talking about within all-time highs of 1 point exactly, 42.57.25. We're trading the high 42.58.25. NASDAQ 100 pushing all-time highs as well, 14,377. We get the Dow up 285 points. Dow accelerating on the open within 1,000 points of that all-time high. You're talking about the Dow, though. My goodness, you just gained 1,000 points this week alone, folks. Check out the Dow on a 15-minute basis. Sunday evening, you're below 33,000. We catch a bid on the open to above 34,000. I mean, all the moves are just remarkable. The S&Ps are a solid 125 plus points above that level, and the Russell, on a percentage basis, the Russell's more than 100 points above where it was trading at. 22.06 was the low on Sunday night. All right, jumping around to what else we got going on, folks. If you head on over to the front page of TFNN, Tom O'Brien, my dad, out with his 1,000th gold report, 1,000th weekly gold report, almost 20 years. Continuous on a weekly basis. Remarkable consistency, and congrats to him for that achievement for sure. We got two sales going on, folks. We got a Tiger Dollar sale, runs through July 4th, so that's only through next week. Remarkable, it's already July 4th. Runs through next week. Tiger Dollar sale, you can get up to a 40% bonus. If you're not familiar, Tiger Dollars can be used for any TFNN newsletter or service. You can purchase them in options of $500. You get a 20% bonus, so you end up with 600 Tiger Dollars. You spend 1,000, you end up with 1,300 Tiger Dollars. That's a 30% bonus. You spend 1,500, you end up with 2,100 Tiger Dollars, a 40% bonus. Tiger Dollars never expire. They can be used for any TFNN newsletter or service, whether you're a current subscriber, a new subscriber. If you're a current subscriber, you apply them to your account. They're automatically deducted. If you're on a monthly recurring, for any subscription we have, from any of the newsletters we have, not just for the Gold Report, folks, for any newsletter these work. Tiger Dollar sale, that runs there. And then Gold Report. Speaking of inflation, folks, Gold Report pricing, it's going up. As of July 4th weekend, the price will be rising, but you can lock in the current rate for as long as you remain a subscriber. Folks, if you're thinking about signing up, you've been thinking about signing up, if you're considering it at all, this is the time to do it because you lock in the price. You're still able to get a 30-day money-back guarantee, as we do with all new subscriptions. You can lock in that rate for as long as you remain a subscriber. So that deal won't come back around. You can sign up for the monthly, the 6-month, or the yearly. Whichever one you sign up, you lock in, and they're all going to be going up as of July 4th weekend. So I encourage you to check it out. And all of those come with a 30-day money-back guarantee. So if you're thinking about staying on, I encourage you to think about 6-month or the year. That way you lock in that rate as well. Add the savings, and you can always get your Tiger Dollars first, then apply them to the subscription. That way you add the savings on top of savings. No way, no doubt about it. Check it out on the front page of TFNN.com. All right, I'm going to jump over to a couple stocks I was looking at. How about Roku? So Roku, flat today, was up to 431, which is why I was looking at a pre-market. So speculation here that Comcast may be going after Roku. Maybe they'll be going after Viacom as well. We'll pull up Viacom. Both of those stocks accelerated higher yesterday. Look at this chart. I have a 15-minute chart going back just 5 days, and you're up $100 on Roku. Remarkable action on this equity. You're pushing right back to the higher trading range. We made it up to 486 originally. Now you back this thing up on a weekly to get the full run here. You go from a price point of the COVID lows of $58. You trade up to a price point of 486. We pull back exactly to the 50%. We accelerate higher. Man, if you're ever talking about that, that's an A to B, C to D. That's like a $430 A to B leg. Not sure that's the case, but nonetheless, folks, we have just traded up $150 from where we were the week of May 3rd. Now, what's interesting here, you jump over to the Analyze tab, okay, and you talk about this equity is pushing a $56 billion valuation right now. Comcast, I think they're at about $250. CMCSA, great company, Comcast as well. Comcast right now pushing 257. So Comcast on the flip side of that pulled back yesterday on this news. There it is, that they might be going after, I think it was a journal article that talked about Comcast may be going after potentially Roku or potentially Viacom. So you're going to see the spike there in Viacom as well. Viacom up 1.3% today. Roku, there's the spike on that, accelerating higher. Interesting to see what happens. I mean, it's not small companies, right? You pull up Viacom and jump over to the Analyze tab, $27 billion company. Roku's about a $60 billion company. As I talked about, you have Comcast, about a $260 billion company. But consolidation in this industry is going to continue, folks. We'll jump over to some of the other big players. Now, Disney's up about 0.6% this morning. We have some Disney in my newsletter. Disney, $320 billion market cap. Disney's got a lot more going on, though, than some of those other companies just pushing out streaming content in terms of the parks, the business they have, in terms of their ability to pump out movies, blockbusters, the brands, the content, the IP, the intellectual property that they own to the tune of Mickey Mouse. Only one Mickey Mouse, Donald Duck, Goofy, the whole deal. Only one of them, folks. And Disney owns them, not to mention everything else they own. Star Wars, right? Marvel. I think they got National Geographic in there as well. Pixar. Just remarkable, the content. And then we'll jump to Netflix. Now, Netflix, to their props this week, inked a deal with Steven Spielberg. And so they're starting, as one of my friends put it this week, he said, Netflix might start figuring out that content is greater than cash. As in, you need that content, all right? You can't just spend the money, especially when you have competitors like Disney in particular, coming for your lunch. Disney's growing tremendously, all right? But you're seeing it already with Comcast. What if Comcast buys Roku? Maybe they buy Viacom. You have the deal with Discovery, merging with Time Warner, right? They're creating a new entity in their own right. Two behemoths coming together. You get HBO Max, some of the strongest content brands out there in terms of the shows that they put on. Then you have Discovery, which just has so many reality TV shows out there, 90 Day Fiancé on Discovery, let alone Discovery, all the programs that they bring with it. Netflix, though, starting to realize maybe that they gotta come to the table with more than just cash. When I was first getting into Disney, one of the trades in my newsletter, one of the things I said is, can you name one product that has been put into retail and branded and merchandised from the Netflix content brands? Stranger Things may be probably the closest franchise that has dolls out there, or maybe they have lunch boxes, right? Stranger Things, a huge hit out there. I'm sure there's others on the Netflix brand. But when you compare that to some of the content brands that Disney has, I mean, they just, they got Baby Yoda, let alone a million other different dolls that encapsulate their intellectual property of the brands they own. All right. I think Netflix is starting to figure out they got to bring on some content brands that are going to change the way you view that versus just a company that's plowing out $18 billion worth of programming every single year. And it's just endless. But guess what? All of them bring along an aura of mediocrity. Now, there's some great programs on Netflix. I'm a subscriber to Netflix, have been forever. But the deal with Steven Spielberg, they got the right idea there, Netflix. Bring it on a differentiator as opposed to just paying for content, because they got some competitors now who are doing it in a big way. Netflix up 0.5% with the market right now. You got Disney right now accelerated a bit higher, up about 0.8%. And we'll jump to Discovery and Time Warner. Talk about struggling when they inked this deal. Remarkable action here. This thing accelerated to almost $40 on the news of their deal, and we've backed down to $30, let alone the Archegos blow up, where this thing went from 78 down to 29. And we'll finish it up with Time Warner, as they've trailed off as well. Both of those equities really paying a price for that merger. Not usually the case, but nonetheless, Time Warner, about 40%. We get the S&P sitting right near all-time high. Stay tuned, folks. We'll be right back to wrap up the show. I'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow above 34,000. We get the NASDAQ 100 up 104 points. We get the S&Ps up 25. I got a chart here of CrowdStrike. CrowdStrike making new all-time highs. That acceleration a couple days ago to 257.55. Just want to pull it up. And I do have some CrowdStrike in one of my accounts, retirement. But these Fibonacci's, folks, you know, you don't have to live and die by anything. But the 618, the 382 in particular, I mean, look at this acceleration it got from the run November 10th. You trade from 120, give or take, up to a price point of 251.28. You pull back to a 618 on March 5th. You pop, you pull back to that area, test it again on March 30th. And since then, we consolidated. And just like that, though, man, from May 11th, you trade from a price point of 177. Percentage-wise, you're talking about staggering prices there, right? What are you up, $75, give or take? You're up almost 40% on this equity from May 11th. volatility, especially in some of these companies that are so growth companies, as in the multiples that they're priced on in the future can vary greatly. But nonetheless, this is a strong company. They got an upgrade this week from one analyst, which sent them higher up to about 253. One of my other favorites that I've had an account for a while is Victoria's Secret, L Brands, Bath and Body Works. Always confuse it with Bed Bath & Beyond for a moment. Bath and Body Works, Victoria's Secret. You back this up to a 3-year weekly. Now, I was in here before COVID. Something like $18, I think, is my price in there. Held it through the lows, $8. This thing makes it through. They're going to spin off Victoria's Secret. And, I have a Fibonacci retracement on there. I think I was putting it on maybe when this thing began to pull back, as you had going from the highs that it had maybe in May. You pulled back, but nonetheless, you're talking about this week making all-time highs. You put it back on the daily. All-time highs today, up another 1.2%. And just comes to mind, talking about equities that have movement. How about Restoration Hardware, the run it's had during its run from COVID, from $73 to $682. Remarkable action across the board. But guess what, folks? When you got an S&P that looks like this, okay, you're going to have higher prices across the board no matter what, but it always doesn't go like this, folks. I don't even want to talk about what kind of possibilities are possible on a 382 basis when you're 800 points above that 382 level on the S&Ps of 3470. Interesting when you look at almost right back, 3397. Remember 3397? When we got to that level, just getting back to prior to COVID levels. Mark, stay tuned, folks. Basil's up next. Don't miss the sale going on the front page of TFNN, Tiger Dollars, and the Gold Report. Check it out. We'll be right back.